Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, so, we're here. We've got a whole bunch of these small range days on the daily chart. They try to consolidate a little bit. They try to push it back. They've made it as low as 41.01 half this week, and these dips just to an incident continue to be bought and taken up back up towards the highs. So they print an all-time high yesterday. Globex 41.44 in the morning. They've taken it back up from 19 half. Your current Globex high is 41.39 half. So they continue to push into this area. But the one thing that they have established is that the 4,100 round number area is support until the bears find enough of a push down to break it, convert it, and start living back in the 4,100 to 4,000 area. Hourly chart, and you can see these little dips bought. So far bought, and every one of them has resulted in a new all-time high. So this 44 is definitely under threat as we get into the meat of the day. So they spent a lot of time underneath that hourly midband, and about 2 a.m. into Europe Open, they just gave it up all over again. So yesterday definitely was the best trading day of the week, at least from my perspective. There was a decent long in the morning, up into that 44 area. It was something that was pretty whippy though. And then, we started to put in successive lower highs. So it was really a matter of weathering the storm of whip and boredom until it was ready to break. And there were a couple of false breaks during the course of the day. And then, as we got later into the day, we got into a couple of nice ones. We ended up short like 30, 35, 36. That ended up a decent trade. We had a couple of nice looking shorts from 25 on re-entry stuff, and they were printing lower lows. You can see that here. But what we've seen time and again is an inability by the bears to follow through on the edges. Here, and here. Every result, a new all-time high. And the concept, rinse and repeat. It's just on a bigger scale. So if I told you this was a 5-minute chart, not a 1-hour chart, we did this in the room yesterday. If I told you this was a 5-minute chart, not a 1-hour chart, you'd be like, well, we just want to, we want to be long and we want to buy this stuff. Because it's a 1-hour chart, first of all, in times it is excruciating to trade because of the little small boxes they force you into while you're waiting for the next resolution. And it also allows you to do a lot of thinking about, is this the move down? Is this, what we want to do? And it's okay to be short in these moments. We were. What you have to do, though, is when it stops working, when you can see that start, you got to take your profits. You have to find a reasonable way into the other side. I'm not trying to catch these lows at all. I mean, I'll let them come back in 5, 7, 8, 10 handles because I know if it's the real deal, it's going to go up a heck of a lot more than that. When the actual break comes, you're going to see something like this, but then you hit this one and you're going to get a big move down. And until that happens, and what does that big move down, quote unquote, owe you? Not a whole hell of a lot. Maybe weekly pivot, something like that. If you think it's Wile E. Coyote off a cliff, that's going to be that's going to be news related, unpredictable, and you never really know it until you're in it. All you can do right now is understand that these dips are being bought. You can be short for a trade, but the trend right now is it's a slow drip, but it's up. And when those shorts stop working, take your profits, find a way out on the other side. And if it doesn't work, and they really start to reject that lower high, then be flexible, get short. We were long we were long, where am I at here? We were long 27 yesterday before we were short the 25s because they came back in here and did 16 and they were starting to blow it. And so it's like, yeah, okay, well, let's take off our runner from 35s. Let's get long in the 27s, see if they want to V them, take them back up into the close. They didn't. So we take a minus 1.25 on the turn. We get short 25 for a couple of nice trades. Just be flexible. Don't get ingrained in this has to be A, B, C. And that goes for people that want it, that are just blind dip buyers as well. You have to be flexible and understand whether your trade is actually working. It's price. It's not what you think or what you want or what you feel. It's price. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come on in and learn this stuff with us. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.